We're talking about the equity markets in Nigeria, and we're doing a year-to-date review. Femi, we know that things have not been that great. But like last we were saying before we went for this break, we knew that there's still value in the market, but you have to be looking outside the banking sector, and you have to be looking at value stocks. It seems to me that more FCMGs, because if we take a look at the stocks that did well so far in 2011, this year, you're looking at stocks that are more or less unknown. We're looking at companies like Champion, Breweries, Nemeth, Air Service, Flour Mills, Guinness, Berger, Evans, 7-Up, Presco, the Nestle's, they've done very well. And companies that have done very dismal, company like Starcoms has had a loss of about 63% this year after the private equity people dumped those shares. DN Meyer, and of course a lot of the banks are doing quite badly. So how has this affected the market as a whole? Market capitalization, trading turnovers, price earning ratios. What are we seeing in those regards?
I think the first thing you got spot on is that the market is making a shift. The activities within the market during those times we knew 2008, 2009, 2010 were more like portfolio investors coming in, taking a short take into the market because they were looking quite attractive. The returns were attractive for them on a short term. But what you've now found is a shift towards the Nessus of this world, the Cadbury's of this world. If we were to look at the market cap in the whole market now, you find that 25% of the whole market cap as at Thursday was about 8 trillion, and then you find that the Dangote cement on its own, with a price earning ratio of 18.89, I couldn't understand an earnings ratio of a company that does not have any liquidity, no free float, stock in there, and basically just weighs down the whole market cap in itself. If you were to discount it out of the whole stock exchange itself, you probably have a better performance in terms of the whole market, as it were. And so is that a distortion or not? No. What I do see, however, is that a company like Nigerian Breweries, the Zenith of this world, the Nestle's, Flour Mills, again the Dangote cement, basically accounting for about almost 40 or 50% of the whole market. And in terms of gains, they've virtually been stuck in the same place. The only other company, however, that seems to be doing well amongst any of the banking sector, if we were to look at that, was Stanbic IBTC.
I think Stanbic IBTC was the only company this year that has so far recorded a positive in terms of year-to-date pricing.
Not just this year. It's I mean, the banking stock never had any. It's had 3.94 increase in its shares since the beginning of the year, and there's none other close to him. Strangely, if you were to look at the total banking sector itself, the same IBTC, if you were to pick it from 2008 till now, is about the only one that has the least negative year-to-date results. You have Sky Bank, IBTC, GT Bank, Eco Bank, and FCMB are the only 5 top banks if you were to take it from 2008 to now. So if they're saying any changes in there, you can't. In terms of the technical details you wanted us to talk about in terms of EPS and price to book value, you would find that there's really no value in these stocks, as it were. There are none, really. The uncertainty around the banking stocks itself does not lend credence to that. You're not going to play around the stocks. You do not know whether they would exist tomorrow or not. You're not going to invest in companies where you do not know will continue to do business. But it's quite interesting also, because if you take a look at some of the statistics and the data we have here,
Unity Bank, WEMA Bank, Union Bank, AFRIBANK, First Inland, Oceanic, Platinum, and Intercontinental from 2008 to date, in terms of their pricing, their losses are in the high 90s.
95, a minimum of 95%.
Yes, and those are the 90s. And then if you take a look at Springbank and UBA, you're looking at losses in the 80s.
Yeah.
Fidelity, Diamond, Sterling Bank, and Access and First Bank have losses in 70s in terms of prices. And then in the 60s, you'll find Zenith Bank, FCMB, and Ecobank.
Ecobank.
Yeah, Guarantee Trust Bank, IBTC, and Sky Bank you find them losses in around the 50s. So it's really a bloodbath, really.
It's not so much of a... If you look at those stocks in the 90s, are basically all the banks that the CBN got involved in. People have always said there's no relationship between the prices of those stocks and the action. You can find your answers.
Definite
here.
correlation.
Correlation straight away. Second ones are those ones which were in the borderline per se, especially in the report. The market has basically mirrored exactly what the CBN has done. Now, the question is this. We do not have the data to really show the incidence in terms of their profitability as in when they had the spikes. Some of them have actually been able to come up from a further low, but you don't see any of them climbing up anytime soon.
And I think that's the correction we've talked about.
Exactly.
So what's the focus now? It seems that people are becoming more discerning. They're looking into the sort of management you have, your corporate governance, who the people are, who is behind your shop. I think people have been bitten. Once bitten, twice shy. So now they're looking to see who are these people running these banks, who are these people running these companies, what sort of corporate governance do you have? Are you adhering by the rules?
Correct.
Do you have bad loans? And I think people are beginning to take closer scrutiny because you find out that the companies that are doing well, I don't know if this is correct, but it seems the companies that are doing well are also reflecting their management.
Oh, you can tell. NSE hasn't gone out to raise money in the last few years. It hasn't declared a rights issue. It's spending more time turning around internally generated revenue to providing for growth, moving its plants, changing the production process, strengthening its board, taking better decisions. And you see that also happening with Cadbury, bouncing back, having a better rein on its cost and producing new products, developing new processes. Now, these are the fundamentals that people are saying, okay, can we put our monies in this? But then you have to go back again and look at where is that money coming from? If substantial, if not 70 to 75% of the money in the market are all foreign based. They're not locally funds. There are not too many local funds in the Nigerian capital market.
Because even Guinness, Nigerian breweries, most of these companies have been taken over by the foreign owners, and they've restructured most of these companies.
Exactly.
Unilever, they're putting it on the right track, and it seems to me that
when you have a market filled with portfolio investors, they now begin to go for value stocks if they intend to play for the long term. If you look at asset managers who are basically with a 5-year horizon themselves, they will be looking at stocks who they know that their business model will allow them to stay in business till about 5 years. But if you look at all those stocks that gave the market its good name, they were like what you call the in and out type of stock. They're just trading stocks. And so the broker can actually move. But you and I know that most of the stocks moved up without any correlation with any fundamentals, without any growth in business model. And you find that still on the stock exchange here, you find stocks like, I noticed too in the data we just threw out, and we're talking about Big Treat.
Okay, Starcoms, those are gone.
Yeah, those are distortions on the market now, and then the market has corrected itself and thrown them out.
Yes, I mean big time. I mean majorly.
And then you're looking at the stocks we normally don't look at before, now coming up and playing a role. Premier Paints, for example. These are stocks most people will never play any interest in. But
even Champion Breweries.
Champion Breweries, correct.
Doing quite well. And Berger Paints, Evans Medical.
Exactly.
You know, even Presco, surprisingly.
You use the word surprising, but not so surprising because it's been building up since 2010. And so the performance you see in 2011 makes sense. 7-Up, for example. You would have expected the breweries will stay in there. They won't give you significantly high performance or significantly low performance, but they would stay in there. And so for me, I just
slow and steady.
One line you would take out from all this is that, look, the profile of the investment market in Nigeria has changed. And what has also changed, therefore, is that the players who rushed into that market, we hopefully by now should have had all of them out. Basically, speculators in the market, they're almost drained out of the whole market. So I don't really see any major thing for me to talk about in terms of this banking sector.